Hello children, welcome back. This is Mousumi Chakraborty and today I will be discussing with you on journal practical aspects. Question number 1. Enter the following transaction in the journal of C.R. Ram and Sons. The question goes like this. January 1, C.R. Ram and Sons started business with cash 50,000. 2. Purchase goods for cash 20,000. Purchases goods from Subhas for 12,000. Next. Purchase furniture for cash rupees 6,000. Next. Paid cash to Subhas rupees 8,000. Next. Purchases goods from Ravi for cash rupees 7,500. Purchased goods from Ravi 5,000. Bought machinery for cash 8,000 and paid rent 4,000. So the first journal entry will be cash account debit to capital account 50,000. The entries will be cash debit, that is real account debit what comes in, and to capital personal account credit the giver. January 2, purchases account debit to cash account. Purchases nominal account debit all expenses and cash real account credit what goes out. Next, January 4, purchases account debit to Shubha's account, purchases account nominal account debit all expenses and personal account credit the giver. January 5, furniture account debit to cash account, real account debit what comes in and cash real account credit what goes out. January 10, Shubha's account debit to cash account, that is personal account debit the receiver and real account credit what goes out. January 16, purchases account debit to cash account, purchase, that is nominal account debit all expenses and real account credit what goes out. January 17, purchases account debit to Ravi account, that is nominal account debit all expenses and personal account credit the giver. Next, January 20, machinery account debit to cash account, machinery, that is real account debit what comes in and real account credit what goes out. Last one, January 27, rent account debit to cash account, that is nominal account debit all expenses and real account credit what goes out. 400. We need to add up the entire records of all the transaction which comes down to 1,16,900. Moving on to the next question, that is enter the following transaction in the journal entry in the books of Yash Raj and Sons. 2020 April 7. Sold goods for cash 13,000. Next, sold goods to Mahesh 15,000. Received cash from Mahesh 10,000. Sold goods to Suresh for cash 12,600. Sold goods to Suresh 7,000. Withdrew cash from office for personal use 2,500. Paid wages 450. Paid salary to Gopal 1,200. Commission received 200. Moving on to the solution of the second question, that is first one, cash account debit to sales account 13,000, real account debit what comes in, nominal account credit all income and gain. Next, Mahesh account debit to sales account 15,000, that is personal account debit the receiver, nominal account credit all income and gain. Third, cash account debit to Mahesh account, that is real account debit what comes in and personal account credit the giver. Next, cash account debit to sales account 12,600, that is real account debit what comes in, nominal account credit all expenses and gain. Next, Suresh account debit to sales account, that is 7,000, personal account debit the receiver, nominal account credit all income and gain. Next, drawing account debit to cash account. Drawing is a personal account, that is why personal account debit the receiver, real account credit what goes out. And wages account debit to cash account, the next one 450, where nominal account debit all expenses, real account credit what goes out. Salary account debit to cash account, that is nominal account debit all expenses and losses, real account credit what goes out. Last one, cash account debit to commission received account 200, real account debit what comes in and nominal account credit all expenses and gain. We need to add up the transaction total which comes down to 61,950, both debit as well as credit. Moving on to the third question, record the following transaction in journal in the books of Vishal Brothers. Commenced business with cash 5 lakh. Goods purchased from Mohan for cash 50,000. Goods purchased from Ajay 1,20,000. Goods returned to Ajay 5,000. Goods sold to Rajiv 40,000 and Rajiv returned 10% of the goods. Moving on to the solution, cash account debit to capital account 5 lakh, that is real account debit what comes in and capital account is personal account credit the giver. Purchases account debit to cash account, second entry for 50,000, where nominal account debit all expenses and losses, real account credit what goes out. Third, purchases account debit to Ajay account 1,20,000, that is nominal account debit all expenses and losses, personal account credit the giver. Next, Ajay account debit to purchase return account, personal account, that is debit the receiver 5,000. Rajiv account debit to sales account 40,000, personal account debit the receiver, nominal account credit all income and gain. And the last one, sales return account debit to Rajiv account 4,000. Rajiv, that is personal account credit the giver. We need to find out 10% of 4,000, that is 40,000 into 4 by 4,000 will be the answer for 10% of the recording. Then adding up the transaction total is 7,19,000. The next videos will be continued in my next presentation. Thank you. Have a nice day.